All right, hope you guys are enjoying this long Memorial holiday weekend. Today is Saturday, late afternoon time here, and I've been getting a lot of questions regarding Tesla. And so today I want to talk about this and give you guys my point on Tesla and how I think this stock is shaping up. Is this a good time to buy Tesla? Is this a good time to accumulate that? Tesla is down quite heavily since the peak of late 2021 here. Tesla was trading at about 400 or so. It went as low as about 100. We're approaching 200 or so, 193. Is this still a good level, or are we still in a downtrend? Is Tesla is going to continue with this downtrend, or should you be buying Tesla when things are on sale? So first of all, what I like to do when I'm looking at a stock, if I'm wondering if I want to buy it or not, you always want to look at the big picture first, and then you want to come back and kind of look at the short to mid-term of things. So we're going to look at the big picture. This is the chart of Tesla. This is a monthly chart, meaning each candle represents 1 month worth of data. This is actually going all the way back to, like, as you can see, 2010 here, 2015 here, 2020 there, and 2023 here. So as you can see, monthly chart here, and so we're looking at a primary term trend of Tesla here, and also you can see my oscillator at the bottom of the chart right here. That's my oscillator on a monthly configurations. So as you can see, things are pretty clear here. We can see when we do see bearish divergence right here. So after a big move that we've seen back in 2012, 13 or so, right, 14, we saw a huge upsurge to the upside. And so when we got to this level here, and when my oscillator gave us that, gave us the bearish divergence signal, you can see we stopped growing. The Tesla stock did not continue to advance. It didn't completely crash down, though we did see pretty significant correction. I believe that was like 40% or so. I know this is a log scale, so it's gonna look, it's not gonna look as much, but trust me, that was a whole lot of a correction. So we did see, after the bearish divergence, the Tesla correcting quite a bit there, and then it just kind of moved sideways for years. As you can see there, consolidation has occurred. And then what happened was, during 2020, Tesla, of course, with everything else, plunged down right here. And again, this is a monthly chart, so you can see each candle represents 1 month worth of data. So 1, 2, 3, 4, 5, 6, 7 months, Tesla came down. I believe it was about 50% or so, maybe even 60% correction. But when that happened, though, again, the bearish divergence was there to let us know that maybe that's the time to take some profits and wait for a correction to maybe accumulate more. And then when the oscillator came down to, finally, this is the first time since the inception of this stock here that you can see, this is the first time we're seeing Tesla, the monthly chart, the monthly oscillator, hitting the oversold level. First time happened in 2020. And then when we witnessed that oscillator cross right there, definitely there was a bullish reversal signal, especially when we hit this oversold level, and then it crossed back up. Keep in mind, the monthly oscillator, when it's oversold in a primary term uptrend and then it crosses up, it rarely does any sort of whipsawing action. Because I think a lot of people always worry about, well, yeah, it crossed, but it might cross back down, and you might wonder, what about here? Okay, look at this. This thing was crossing all around that whipsawing here. That's why these things are never reliable. Well, there's no indicators or oscillators are going to be 100% reliable. So it's all about probability and statistical outcome. However, what I've noticed is that this is in the middle of nowhere, right? You can see that oscillator is not at overbought or oversold or overbought. It's middle of nowhere. So when you see oscillator kind of crossing up or down in the middle of a nowhere territory, a lot of times you're gonna see some whipsawing. Same thing happened right here. It looks like it's gonna cross up again. That was kind of a middle of nowhere. It wasn't an oversold level. It was sort of middle of nowhere. So then you can see we saw sort of the whipsawing action there. And there are times where you will see these things crossing back up. So when you see the oscillator, especially the monthly oscillator, when you see it crosses up in the middle of the band, you sort of have to be skeptical of it. But when we do see a cross near at oversold after prolonged downtrend, or maybe even some very prolonged consolidation, maybe that's a good signal that there's enough of liquidity in that vicinity where the it attracts the buyers, at least the value buyers of that. People are looking for stocks on sale, right? And a lot of times smart money is gonna buy some of this in this vicinity, and this is again that this is accumulation phase, and then this is gonna be the public participation phase, and then distribution phase, right? Those are phases of the stock rallies and falls and consolidations and all that. So when we see that 2020 oscillator hits that oversold, we crosses up, and we saw that huge up move on Tesla. And then what happened? And I tweeted this out, I'm sure sometime in 2020, 2021 on Twitter, that there's that bearish divergence. So once we see that bearish divergence, once again, this happened before. Once we see that bearish divergence on my monthly oscillator, at least you have to wonder, can this stock keep going higher, right? You can see that higher high on the price action here, but then lower high on the oscillator. That's a bearish dive. It means that last hurrah of that move didn't have enough momentum, enough substance to continue. I mean, bulls are already tired. I mean, bulls made such a huge move. Oscillator came from the oversold to extreme overbought, and then it crosses down. Well, right there would have been the first warning signal, and then it came down, looks like it's gonna cross back up, and then it falls back down. Huge warning signal, and then breaking below some of these levels, right? And then you can see I think that was like 70-80% decline on Tesla since the 2022 peak. And then now again, you can see here like 2020 low, we're seeing the oscillator crossing up here right at the oversold level. This was sort of similar to just the way it played out. If we can just kind of observe the price action, the candles here, it's very interesting how similar it looks to 2022 or 2020 COVID fall. As you can see right here, we see sort of like, you know, as you can see here in 2020, with the harami or sort of a tweezer bottom candle, you do need to see a follow through. And then we see the second month right here after the harami or the tweezer. You can see second month, we see a little bit, but it kind of grinded. So we can say maybe that's a bull flagging for 3 months, and then finally broke out. It's very interesting price action because we have a very similar price action here. This one looks more like a bullish piercing, not the harami or the tweezer. So you can see this is where it closed the last month of that month, like the 30th or 31st or whatever. And then the first, it opened slightly lower, so it gapped down. So that's why you can see that candle slightly lower. So this one actually is more like a bullish piercing. And then when it pierces, when the bullish candle gets up, you see that green candle, it has pierced above the 50% of the red candle body. And looks like this one did that right here. You see that? It pierces above it. So it has to start lower for this to be a bullish piercing reversal candlestick pattern. It needs to start the month lower because this is a monthly candle, right? It did that. And then it pierces above the 50% of previous month's red candle. It did that. And then now it looks like it's bull flagging here. So if it breaks out to the upside, it could potentially look very similar to what we witnessed again right here. right? This is more like a bullish tweezer, bullish harami. There's a flag there, and then next month we see a breakout, right? So that all these sequence of move, all that sequence is letting us know that we have a major reversal occurring here, right? And then market made a move to the upside. And right now we're on that sort of that second stage of this candlestick pattern here. First stage was obviously with a bullish piercing, and then second stage we were seeing that consolidational move here for about 4 months. All we need to see a follow through to the upside to confirm the full reversal there. So now that we understand the monthly chart, the big scope of things, now what we can do is that we can go back to my daily chart here, as you can see here. So now I zoomed into, this is a daily chart, so each candle represents each day worth of data. And so we're going all the way back to 2022 peak to where we're at today. So what you want to do is, if you're looking at your charts and want to draw a couple levels here, you always want to start from the all-time high level here. That's all-time high level, and then just look at some of the pivotal levels where the market seemed to respect. So you can see definitely this is a pivotal level there, because you can see it hit there several times. That's a pivotal level. And then we tanked here, we got back up here, and then it seems to struggle underneath 215. And you can see sort of the portion of it. So you really want to have a kind of, you can see the portion, how I've drawn these horizontal lines. The portion is kind of a well matched, and it just kind of it's a symmetrical sort of lines there. You see some charts where just have a bunch of lines everywhere. It's going everywhere. You really can't see anything. You really got to let the market move around, give it some wiggle room. So you don't need a bunch of lines going everywhere. Just have several lines, just so that you got the good framework, right? Like you see in this guy, you got a really good framework right here. 411 all-time high, 311 kind of the middle point, and then 215. This is where the bulls are struggling. And then you can draw maybe one downtrend line or something like that. And as you go, as the market makes a move, you can kind of change these resistance, support, horizontal lines a little bit. For now, this is a framework we have, and you can see definitely that's the falling resistance below 215. So we are now ready to sort of understand. So first we understood the big picture, the long term. Now we're gonna kind of zoom in here and understand a smaller, kind of a shorter time frame to figure out when could we possibly see this market finally reversing back up. And if you want to annotate some gaps and stuff, you guys know I like to follow the gaps. You can kind of put little box there on that gap. There's another gap right here. You can put a box there. There's a gap here, smaller gap there. So then now, and then there's that gap's filled, and there's some up gaps. There's up gap here, some up gap there, and some up gap here, right? And some here, and a little one here, just tiny one. So now that falling resistance here, as you can see, that's been what weighing this price action down. We're not to get above it. Definitely, it's not because I said it. It's because the market is being keep respecting it every single time. And then also with this down gap, it's not going to help, because now that down gap has that presence, that bearish presence. That's why it's important we follow and we understand, identify these gaps, especially we're looking at the short-term movement of the market. So now we say, well, what's going to happen here? We're on the resistance here. So are we going to finally just come right back down? Because that's how it has been moving. So is this going to be the time? Are we going to finally break this trend and finally break above this falling resistance, get above this falling resistance for the first time in maybe in a little bit of 8, 9 months or so? Or is the first time we're going to break above it? It's tough to say, but so then what we need some of the oscillators tell us, are we overbought? Do the buyers have some energy left here? So if I look at this oscillator, you can see we're not quite that overbought yet. And then it looks like we broke above the neckline of previous swing high here. So that tells us that this time around, bulls do have a little bit more confidence than before And looks like bulls are not fully tired yet. They still have an energy, like at least couple. And this is a daily oscillator. We're talking about maybe it could be even like 3-4 days of move left. This is different than 65-minute chart. This is a daily oscillator, so it's gonna move a lot slower. So we have couple days of move remaining. It looks like this oscillator is actually seeing a little bit of that cross up here and slightly breaking above that as well. So look at all these oscillators together. This one's not even near that peak there. So we look at all of this and we can kind of come to a conclusion that, okay, possibly if the bulls can able to go up and fill this gap, or better yet, if they can gap it over, maybe even turn this into an island, maybe then if we gap over and then we turn this into an island bottom reversal gap up, there's a good chance bulls can possibly break above 215 this time around. However, let's say bulls finally thrust above it, right? And then we get there and then we fill the gap, right? If we get there in first day, 1 day move, and we get there and fill this gap in 1 day move, there's a good chance we could consolidate and then maybe have another move to 215. However, it takes, we start to flag here a little bit, let's say a couple days, and then break out. Then by the time the price get up there, because we flagged couple days, and then it breaks to the upside and fills this down gap. Remember the oscillators, it's gonna get overbought. Bulls gonna be extremely tired. They're gonna need to rest, and bears gonna find that opportunity to kind of push it back down. And then we have to reanalyze at the time how the market is behaving. If that happens, can this falling resistance now act as new support? So what could potentially happen is it goes up, oscillator gets overbought, bulls need to reset that oscillator, they need to rest, bears gonna use that opportunity to push it down, but then it comes down, right? And then use that oscillator as new support, or that falling resistance here, the purple dotted, and then potentially that market finally get above 215. And then we're kind of leaning towards this scenario because we looked at the monthly chart, the long-term chart, which favors the buyers.
Yay, yay, hurrah, hooray. Yay, yay, hurrah, hooray.
Well, that's sort of the kind of the basic of, how I like to analyze this market, and when I'm ready to kind of trade or get into a trade. It's sort of the basics of, there are other things that I go through, but this is sort of the very quick basics of, I always like to look at the big picture first, and then come back in, and then zoom into the short-term picture, and then I want to pinpoint, okay, what are the possible scenarios, and how could I use some of those scenarios to maybe get in my entry? Where am I going to enter? And then what is my strategy, and what is my target? How long am I gonna? And all of that comes about after. So if you want to learn all of this, only this weekend, only for Memorial weekend here. So until Monday night, so you have 2 days here until Monday evening. I've decided to open up the only the investor here. So investor annual is actually $5,990, but for this investor annual, 40% off, you'll be saving $2,000 for annual, so you'll be at $399 or $3,990 for investor plan here. So as you can see, so you'll be covered by with my, so all of my current. So basically, you will have access to all of my current holdings on stocks, index funds, commodities, and leverage ETFs. So you would have access to what I'm currently holding, and then you would also get alerts and updates on what I'm gonna be potentially be buying. And obviously all of that comes with the, all these updates, or midweek update, investor update, special update. There's a masterclass, mental training, video lesson library, hundreds of video lesson library, macro trend analysis, and obviously there's a corrections that happens like 2020, 2022. I'll guide you through, and I'm gonna have you focus on the long term, how to balance your portfolio. And a lot of people are always so wondering about my moving averages and oscillator settings and configurations. Well, every single oscillators, every single moving averages, you know what I'm saying? mods, settings, chart template, 13 chart templates, 21 moving averages, 10 oscillators, 6 time frames. All of that is available for you if you wanna kind of, you know, set up your charts just like mine. And this is kind of the reason why I was able to call every low since 2016. I know a lot of you guys been following me quite some time, and you guys know that I've been advocating that when everybody's been calling for 1929 Great Depression, or you know, every single correction we'll hear 1929 is coming or 2008 financial crisis all over again. Trust me, I've heard that here. I've heard that here. 1929 Great Depression 2.0 here, and then obviously we've heard the same in 2022. And so I've been accumulating those levels. I've been holding a majority of my longs since 2016 lows, letting it compound over the years, and also do position trading with the leverage ETF. So there's some trades that I go in and out. And some of that you can see here, this is a comparison. And so some of the analysis I like to do a lot is kind of go back in time and see similar sort of similar, you know, price, like a similar behavior of the market. Because we as a human being, we tend to be predictable, right? Like if somebody observed you like for an entire year, you'll do certain things in certain situations. If you're stressed out, you're gonna do something to kind of give you that comfort level back up. And market sort of acts a certain way. You can see during 2020, this is Dow Jones, 1962, 2020, 2020. As you can see, look at that oscillator here, look at that oscillator here. Look at how market initially got up, looked like it was gonna you know, break up, but comes right back in and make new low. Same thing happened in 1962, and then it just goes shot straight up, right? How many people are thinking they're going to see a straight up V-shaped reversal during 2020? Not many people were expecting that. Do you guys remember 2022, how difficult the market that we've witnessed and faced during 2022, because we've been blessed with the V-shaped reversals. 2019, 2020, we saw these fast recoveries. And then all of a sudden we're met with the 2022 where we're not seeing V-shapes, but these things just keep going down. Very lethargic, very methodical. You know what I mean? It's really frustrated a lot of market participants. Well, that similar thing happened in 1979, 1980 or so, V-shape, and then things are extremely difficult. 1981, 1982. You can see how this thing sort of like didn't V-shape, but we're seeing these lower highs and lower lows. Very prolonged downtrend, and the market just sort of went berserk to the upside. Is that a possibility for NASDAQ? Well, recently we've witnessed NASDAQ and semiconductor is up 40% year to date. Not just this week. We saw NASDAQ and semi making a huge move there. Some of these are YouTube videos, 2016, 2020, 2022, 2023, the road to all-time high on the NASDAQ. You know, so these things, if you want to learn all these things and these are some special lecture that I've recently published only for the members, so you'll have access to these guys. So all of that, obviously you would have access to it, and you'll be fully in sync with you know, my current positions, what I'm going to be buying, how I am performing. All of that is displayed in my club, and if you want to be part of it and take advantage of this memorial invitation, take 40% off an annual and save $2,000. This is currently at $3,990.